All right, thanks everybody for joining us for today's CISL seminar. We're very pleased to have Dr. Kelly Hereid here, who's head of Catastrophe Research and Development at Liberty Mutual. Um, she oversees Liberty's catastrophe and climate risk management and serves on the science board for NOAA and as a board member for the International Society of Catastrophe Managers. And she has a background as a PhD in geological sciences from the University of Texas, Austin, focusing on climate science, and a BA in geology and biology from Carleton College in Minnesota, which I'm very familiar with because I grew up in Mankato, Minnesota. So anyways, thanks so much for joining us today, Kelly, and we look forward to your talk.
Fantastic. Thanks again so much for having me. Really appreciate the opportunity to chat with you guys a little bit. I think I have sort of an unusual background for insurance and an unusual career path for a climate scientist. So I think it's a really good, it puts me in a really nice position to be able to sort of translate between these two communities that aren't used to working with each other. So what I'm going to be talking about today is how public earth science data gets incorporated into different components of the insurance sector. I'm going to talk about the insurance sector because that's where I live, but I think it's just a really good indicative example of all the different ways that public science works its way into sort of the infrastructure of our broader economy. So I'm going to have a couple of different, if I can move my slides forward, there we go. Okay, so I have a couple of different themes that I'm going to be touching on here today. So this talk is going to be split really into two different buckets. The first bucket is talking about the time frame of impacts to private sector science when public sector science gets disrupted. So there tends to be a perception that, if you turn off the lights, that everything that's going to break will break immediately, but really it's distributed over anywhere from days to decades. And so identifying where that happens and how that will trickle through, I think, is really important to understanding how to support the partnerships between private and public science. Then the second part of my talk will be talking about ideas that I've seen be effective over the years to tighten collaborations between public sector science as well as private sector science, things that we can learn from each other to help an understanding of how impacts can flow from interesting scientific problems. Okay. So in addition to those two sort of big buckets, I want to highlight a couple of really key themes that I'm going to keep coming back to through the talk, which is that there are unique things that public science can provide that the private sector is unable to do, or that it struggles to execute. So the four big themes that I want to highlight here are the value of trust in data products and services that are put out. So that means assurance of independence, as well as things like quality control, knowing that the methodologies are using appropriate science. There is a huge ecosystem of data providers that exists in the private sector as well, but there we have whole teams like mine whose job is to go and take things apart to do that quality control and validation, because we can't rely on that otherwise from private sector companies. The second one is openness. Being able to understand the methodology of how something is built, having open code. It does exist in the private sector, but is much less common compared with public science. There's interoperability. So that means having infrastructure where data can be directly ingested into other pieces of sort of data platforms. It also means collaborations between and across federal science agencies, national labs, academic scientists, and any combination of those. There's a ton of work in the startup ecosystem, but when your peers are competitors, the amount of interoperability that you can have is lower. And then the last one is this idea of persistence. Companies can come and go. Obviously, Liberty will be around forever, but having data sets that extend backwards in time for decades, including observations that go backward in time for decades, allow us to ask and answer scientific problems that we would not be able to do otherwise with shorter term analyses. Okay, so we're going to start off with this time frame of risk. And so again, this is going to be focused on insurance with just some examples that live in my world, but that can give you ideas of how when you sort of pull the plug on different parts of scientific infrastructure that can play out. So the one that probably most people think of when they try to think about how science is used by insurance companies is this idea of event response. So after a major disaster, or really even as a disaster is happening, we are using a variety of data products, including things like remote sensing, data feeds that are coming directly from, say, National Hurricane Center, to be able to identify where an event is happening. We use this for things like deploying claims teams so that we can speed up recovery. This is also used for estimating what the impact will be to our business. Basically how large is the loss going to be, what components of the business are going to be impacted. We talk with our underwriters for large accounts. We'll be reaching out to clients. And so this is a very much like a live real time, if a data product isn't there, then we don't have anything available. So this event response is an important part of the job for my team, and is a function that exists within basically any insurance company. That also means that there is sort of an infrastructure of data that sits on top of these public data sets. And I want to give an example of this. This just is one that sits within my own company. But these types of integrated data feeds are very common, again, throughout the broader insurance ecosystem. So this is an example of an app that we've built internally. It's on the phones of myself and my team, our senior management, our CEO, our board of directors. We use this as events are unfolding in real time. It's built out for hurricanes and earthquakes that directly ties into API-based feeds for hurricane tracks and their associated characteristics from the National Hurricane Center, as well as earthquake characteristics from the USGS. Now, we connect this with modeled loss impacts that we sort of pre-compile before a season starts, and we update it, say, once a year, that we can tie the characteristics of an event with our own private sector internal models or ones that we purchase. But it's using this direct feed from public science to preferentially select out of those data sets what is going to be the most relevant for any particular event. So this is an example of what it looks like. This is just a demo that we have for Hurricane Irma. I've blocked out what the loss numbers and market share here are, but this is, what is the impact to Liberty, as well as what is our proportional share relative to the rest of the industry. Because this is a communication tool that we use both with our business units, our residential and commercial teams, as well as our senior management, our board of directors, our investors. So this is a really critical tool that if it goes down, it disrupts many different parts of our organization. So then another example of a short-term response is that we have certain flavors of policies that respond to an event essentially in real time. So normal insurance policies work where, a hurricane happens, it rips up your roof, you have a claim adjuster come out to your house, say, I think that there's been $20,000 worth of damage to your roof, and writes a check. Parametric policies are a little different because they're actually triggered by characteristics of the event themselves. So, for example, at the end of last year, Hurricane Melissa devastated major parts of Jamaica by making landfall as a Category 5 event. The government of Jamaica had purchased, with the help of the World Bank, a catastrophe bond that is triggered based on the central pressure of the storm, because central pressure is a pretty good metric for estimating the damage of a storm, right? Because it's sort of integrating both intensity as well as the size of the storm. So these triggers are used to where you don't care as much about getting the exact dollar amount correct, but what you really need is speed, right? So you have payouts in weeks or months instead of months or longer. So this is an example of where there essentially has been an insurance-based down payment on the response and recovery for Jamaica so that it's able to recover from this major disaster. But the reason why products like this are able to exist is because there is an integrated research to decision support pipeline that exists across multiple parts of both government and academic research. So in the case of this policy that was triggered for Jamaica's recovery, the central pressure was sampled by dropsondes that were invented by NCAR. thrown out of a hurricane hunter that was flown by NOAA and observed and tracked by satellites that were built by NASA and operated by NOAA. There is nothing comparable that exists within the private sector that can provide this integrated research to decision pipeline today. We also know what happens if this type of information goes away, because there have been cases where these products were built in places that did not have this level of comprehensive data collection and support. And so there's two examples of these that both happened about 10 years ago in Mexico. There's Hurricane Odile in 2014 and Hurricane Patricia in 2015. For both of these hurricanes, there's a guy who just likes to park himself in front of a hurricane with like a little pocket barometer and take videos that he like sells as an influencer or something to that effect. And in 2014, he measured the pressure of this hurricane that went by and caused substantial damage around Cabo in Mexico, and found that the pressure was a little higher than was needed for the full trigger, and so the policy did not pay out as much as was expected. On the other hand, for Hurricane Patricia, which was the strongest hurricane recorded in the Western Hemisphere, he again sat himself in front of this hurricane and again took a pressure measurement that there just wasn't any other data available. It turns out later it was validated by another pressure measurement that was a little further inland, but that was generally consistent with what he found. But again, took like another $50 million off of this catastrophe bond that the government of Mexico had bought to help with their emergency response and disaster recovery. So I've included a quote from the chief research officer of Moody's RMS, which came out shortly after these events happened, which basically noted that this one dude has changed the outcomes of these $100 million worth of catastrophe bonds. So in this case, we happened to kind of luck out, and there was something nearby enough that it looks like it was probably correct. But what if, whoever issued a cat bond started hiring people to go out and collect data with very specific economic incentives in the outcome? It's very difficult to build financial products that you can trust if you don't have trusted science to back it. This is what happens when data collection and observations end up privatized. Okay. So that's short term. Like I said, I focus on disasters. I'm a catastrophe modeler by training. But disasters, obviously we have to respond to them in real time, but they're an important part of actually how our business is structured. So next I'm going to talk about medium-term risk, which is risk that plays out in sort of the couple of years time frame, but that has material impacts on the business model of insurance companies in both catastrophe modeling, underwriting, and pricing. Okay, so quick catastrophe models 101 for those of you who have never heard of them before, which I would imagine is probably a lot of people. They're a pretty obscure little corner of insurance, but if you're an earth scientist, it's a really interesting area to play, because every catastrophe model, anything from hurricanes to earthquakes to terrorism to cyber attacks, are all built on the same fundamental underlying infrastructure, which is you have a large, typically 10,000 year or more data set of things that could go wrong. So that could be hurricane tracks, that could be earthquake footprints. It's any flavor of disaster pretty much that you can think of. And this is where there's a lot of earth science expertise. Then the next piece that you need to build a catastrophe model is exposure. For an insurance company, this is generally description of your portfolio, of your book of business. So I have, this is where I have a policy that is a single family home. It's a wood frame building, it's 2 stories. So these characteristics of the building, and here's where it's located, and here's what the policy is worth. So that's describing essentially the built environment where people live. Those two pieces are related together by vulnerability function, which is essentially an engineering function. So that says if I have a hurricane that produced 100-mile-an-hour winds at this location against my single family wood frame home, I expect 10% damage to the building. I'm making these numbers up, but just to give you a sense. And then finally, there's a loss module that handles things like insurance terms. So it's a really powerful tool for translating science, the disaster itself, into an economic impact that can then be used in many other areas. So the reason why we have to do this is because our historical record is patchy and it's incomplete. So it's incomplete in both space and time. So we use the long observational records that we have available, but we have to supplement them with reasonable assumptions that come out of models. So this is an example of what the observational network looks like for hurricanes. I will say this is a relatively old data visualization, but it's one that I keep in here because I have never seen anyone else produce a graphic that refers to longitude as east-westiness, and I feel like that's a missed opportunity because it delights me every time I see it. Because these tools are also looking at the built environment and their vulnerability, this also means that we can make statements about how we construct that built environment and how that can play out in impacts. This is an example from Hurricane Irma in the Keys. And you can see every one of those houses on the left lost their roofs, but the house on the right that presumably experienced exactly the same hazard basically looks fine. And the reason for that is that you'll notice that all these houses on the left have a roof with two sides. That's called a gable roof. And it turns out gable roofs are highly vulnerable to wind damage. Versus this house over here has four sides, 1, 2, 3, 4, called a hip roof, and hip roofs are much more resistant to wind damage. So you have hazard, right, which is what we think of as an earth scientist, but it also has that vulnerability component. So how resistant our built environment is to damage. These tools are essentially used to produce plausible events. So events that could happen but may not necessarily be represented in our historical record. So we use this to estimate frequencies of very rare events, as well as sort of severity, what is possible or plausible in a particular area. So back in my old days when I worked in reinsurance, which is essentially insurance for insurance companies, that means you really only care about the biggest, nastiest disasters on the planet. I used to have people come and try and sell to me, the brokers who place insurance policies with reinsurers. They would try and tell me, okay, in the eastern Gulf of Mexico, like it's really shallow offshore. There's no way really that you could produce a category 5 hurricane that could make landfall in the eastern part of the Gulf of Mexico. Obviously, they don't say that to me anymore because Hurricane Michael in 2018 made landfall in the eastern Gulf of Mexico along the panhandle of Florida, causing what you see in the picture here in the background. But that person was correct. In more than 100 years of historical record, we had never seen a category 5 make landfall anywhere near there. Basically, from Tampa all the way over to Louisiana, there hadn't been anything. So if you were only using your history, that could have been a plausible argument. But a catastrophe model lets you say, okay, well, my sea surface temperatures are reasonable. I'm able to generate events that are in this area. There's no particular reason why I couldn't have had a Cat 5. I just hadn't had one yet. So there can be really powerful tools for supplementing and sort of filling in the gaps of our historical record. So where are catastrophe models used? So they're used in a variety of different places, but um, this sort of medium-term risk area falls into three big buckets. So there's underwriting, which is how we select new business. So that's how we decide, yay or nay, are we going to take a policy on board? There's pricing, which is what you charge for that. So that sits within actuarial functions, but it's supplemented by catastrophe modeling. And then lastly, the CAT modeling itself is how we manage the composition and geographic distribution of our book of business, our portfolio. It's also how we make sure that we have enough capital on hand that we can actually pay our claims after a really catastrophic event, right? You want to make sure that if there's a hurricane that's made landfall in Florida, that your insurance company has enough money to pay those bills when they come due. And then, of course, it falls into the back end of underwriting and pricing. So the reason why this falls into sort of this medium-term risk range is that the models that the insurance industry uses get updated maybe once every, at the short end, every other year, at the longer end, maybe every 5, 6, 7 years. So they have a fairly high update frequency, but, if a data source that we use to build those models goes down, you can kind of live on the old one for a little bit. But the next time you update that model, it's going to be done with degraded information. So you'll see a gradual degradation in quality of everything that's used sort of as the underlying basis of writing insurance business. So this is a really, it's the kind of thing that tends to fly a little bit under the radar because it doesn't break right away. But it's a real susceptibility for insurers because we have to be able to track when things are impacted and be able to respond to them. So uh, I also want to highlight that these catastrophe models are built using data sets that exist for decades at a time. Um, for example, being able to understand like where your built environment actually is and how land use has changed over time. That's all coming from things like Landsat, which are used to map out how land use has changed over the course of decades. There's a big startup ecosystem now of satellite providers who will go and do flyovers of areas where damage has happened, and you can sort of deploy them in real time, which is great. And it's a really powerful tool and it's a supplement to what is publicly available. But they don't have that long-term history that you can use to build these tools, which is really important because a catastrophe model is not designed to manage the events that you have every single year. It's designed to manage rare events that are far out in the tail, the 100-year, the 250-year return period event, where you really need long data records to be able to reasonably constrain what's happening in the far part of the tail. Okay, so the last sort of time frame of impacts sits in this longer term risk. So this is what plays out over the course of years to decades, with two big buckets here. The obvious one being basic science as well as the talent pipeline. So many of the big unanswered questions in atmospheric science have direct economic impacts that affect both insurance as well as our broader economy. So I got this statistic from Phil Klotzbach using the billion-dollar disaster data set that was formerly managed by NOAA. So this says that out of the hurricanes that have produced at least $5 billion in economic loss, this is since about 1980 when this data set started getting put together, 88% of those hurricanes have undergone a phase of rapid intensification. What this is reflecting is that historically, the vast majority of damage that comes from hurricanes tends to come from high category storms. So it's on the order of 80% or so of damage comes from category 3 and above, maybe 50% from category 4 and 5. So that means that these are disproportionate contributors to the impacts of hurricanes. Now, obviously, trying to understand what causes rapid intensification, how well we can forecast it, how accurately we can forecast it as it's happening is a hugely active and very much still open question in the area of atmospheric science. But answering these basic science questions has real on the ground impacts for how we experience disasters and help to prepare for them in the future. So I think this was really laid out well by a study that came out, I guess, 2 years ago now, looking at the social value of hurricane forecasts. So they tried to put in economic value on efforts that NOAA had put in to specifically improve its track forecasts since 2007. And what they found was that the improvements in track forecasts compared to what it was before they had launched this big initiative to focus on that had reduced the total economic burden from hurricanes by, on average, $2 billion per hurricane. So this is a policy that essentially paid for itself and for much of the budget of NOAA ever since it's happened. So even though we think of this as being sort of a basic science problem, like how do you improve knowing where a hurricane is going to go, it has real downstream impacts on the broader economy. And then lastly, I want to highlight that NCAR continues to be a critical hub for atmospheric sciences. I think, coming from another field of earth science, I sit in paleoclimate as my background. So I trained in the rocks side of climate and not the atmosphere side of climate. So that means that it's really been enlightening to me to kind of understand sort of the central role that NCAR plays within the atmospheric science community. Even just on my team, I have a SOARS alum who's been contributing on many of our climate science problems, as well as my model lead just this past summer participated in a field campaign for Ice Chip, which was the largest hail field research campaign in something like 40 years with NCAR scientists as a co-PI. So this is a continuing centralized training and mentorship opportunity that doesn't just train students that are coming from the academic world, but also who end up in the private sector. Of course, NCAR provides important computational resources. That's one of the reasons why atmospheric science is relatively centralized compared to other earth sciences, is that you need some big tools to be able to do your jobs. Having those available to the community to use is a really powerful resource. This training and mentorship also happens because the models are open and public, and the data that you produce is open and public. That means that if you're starting out new, you don't have to put out a license. I mean, catastrophe models that are used within the insurance sector, I come in expecting that when I hire a new person, they will know nothing about a catastrophe model because they are not publicly developed. And so as a student, you just don't have access to them. In comparison, the models that are produced within NCAR and across the broader scientific community are available to be used and to be played with and to understand how they're put together. And that's a really powerful training resource. Again, I want to highlight the collaboration with the broader research community. I've been working with a variety of researchers at NCAR for in excess of a decade now, which maybe is dating myself more than anything. As your research center is integrated with the private sector, is integrated with, of course, many universities, as well as many other federal agencies. And we continue to see the benefits of that partnership through time. Because, of course, NCAR trains the public sector, it trains academics, and it trains scientists in the private sector on our best in class atmospheric science. So, I would not have I tell my team all the time, I'm like, when I'm sending them to conferences and things, I'm like, I cannot tell you, atmospheric scientist, or you, engineer, or you, earth scientist, how to be the best of each one of those things. You need to be integrated into your community, into your research community, to be able to bring the best of your community's science back to our team. And that it's an entirely integrated ecosystem that we really value in the insurance sector. Okay, so for the second part of my talk, I want to talk a little bit about how scientific research can more effectively contribute to applied problems. Now, this is not to say by doing applied research, although sometimes that's the case, but I want to highlight things that I've learned as someone who trained in very, like I said, old school paleoclimate. And now I sit very much on the impacts and applied side to highlight places where I've seen successful relationships and partnerships that have been able to take interesting scientific questions and apply them in new ways, or by looking at impacts, it raises interesting new scientific questions. Okay, so my first recommendation is to view exposure, meaning the human environment, whether that's built environment, whether that's population, view exposure and hazard together. Because the human environment does not sample impacts, it does not sample hazards on a uniform grid. It samples them based on where people live. So this is an economics paper that I came across a while back that it's looking at wildfire risk around San Diego, where the plot on the left shows where there are restrictions on building new housing, where the areas in green are where there are restrictions, and the areas in white are open for development. On the right is a map of wildfire risk in San Diego. So you may see where the problem is here, which is that if you want to build something new in San Diego, you are disproportionately forced to build in the highest risk areas. By looking with a lens to both of these two pieces together, hazard plus built environment, it can make these relationships where you can see the impacts of policy decisions much more obvious. Now, looking at exposure also means looking at different components or angles of a scientific problem that you might not have prioritized if you weren't thinking about it from the perspective of human impacts. So this is a video from the LA fires this year showing a massive amount of ember generation. Obviously, palm trees are real bad for ember generation, guys, because this is actually how you take a wildfire and you turn it into an urban conflagration. Of course, the Marshall Fire, which I know affected many in your area, operated exactly the same way. These very high wind events are what is taking wildfire risk that we generally thought of as being in the wildlands and is driving it further into the wildland urban interface. So really, please view exposure and hazard together. So the reason why I think to focus on wind um, rather than sort of just burn area, which is another common way that people look at wildfire, is that there was this wonderful paper that I linked down at the bottom here from John Botzblue and team looking at downsloping winds and their contributions to changes in wildfire burn area. However, this paper got latched onto in my industry in like I started seeing its impacts rolling out in models in like a year because there was one little throwaway section in here. It wasn't a throwaway section, it was actually a really important conclusion, which found that even though these wind driven fires, these downsloping winds, are only producing about 12% of the total burn area in the Western US, they're producing 50% of fatalities and 60% of structure losses. So that means focusing on that little component of the hazard can explain disproportionately the majority of our loss impacts associated with wildfires, including nearly all of our catastrophic wildfires, the ones that are burning down entire towns. So the figure on the right is essentially us taking some of those insights and using it to look at our own book of business within Liberty. So we have internally produced wildfire hazard maps that use a variety of underlying public tools, wildfire maps from the Forest Service, but we also calibrate them, for example, with our own claims experience. And then we overlaid with meteorological conditions, so a fire weather index, and this concept of downsloping winds. And we put a little classifier on there that said, is this high risk or not? And compared where our book of business would be affected if you kept everything constant. You don't mess with fuels, you don't mess with where your portfolio is located, so you're not changing any buildings, you're not changing any rainfall. The only thing you change is temperature so that you're exposing more of those downsloping wind days to days when your vapor pressure deficit means that you have dry vegetation and dry soils, and so your risk of fire is greater. So with a very simple, this is essentially a parameter sensitivity test like you would do in any kind of climate model, but it's applying it now specifically to the built environment. And you could get much fancier with this, but our question was, what are the next communities that we don't have flagged as being high risk today that would be new and higher risk in the future? So this map is specific to Liberty, right? So you get different geographic distributions if you look for for something that's not our own accounts. But you can see things like expanding in wildfire risk in the Front Range, increases in risk in the inland Pacific Northwest, which experienced major fires, especially in 2021. We have large accounts in areas where it's just sort of a large single building. So we can use that to prioritize our risk engineering teams, which we have for large sort of commercial structures. We'll send a team of engineers to say, hey, this is what you need to do to harden your building for wildfire, to make sure that instead of waiting until after something disastrous happens, you're protected before it happens. And in particular, I want to highlight that this area in Northern California sees a really big increase in risk with an increase in temperature. This is a 3 degrees C increase in temperature. So I'm going to dig into that a little bit more because we can also pair it with other ways of looking at the built environment. So this is a combination of a couple of different studies from several people on my team, looking both at the climate side. So this is using that same hazard map as you just saw a second ago, but instead of now looking at it from an exposure standpoint, this is sort of the underlying hazard map that's in pink. But then the little hexagons that you see here are neighborhoods. So each of them is about 2 square miles. It's basically just a uniform grid that's imposed over the built environment, using building footprints to understand where buildings are dense. So, a nonprofit research group that we work with, the Insurance Institute for Business and Home Safety, has a new wildfire community standard that says that if more than 10% of buildings within a community are within 10 feet of each other, then you have a heightened risk of urban conflagration, which means even if you do everything right at your house, your neighbor's house is close enough that if they burn down, you burn down too. So as you can see, even in the present day, there are many areas where the built environment is so dense that urban conflagration risk is real and high today in Northern California. You see Santa Rosa, so this is obviously the area near the Tubbs fire, but lots of other areas up here up here is Chico, we're up into the Sierras, right? A lot of risky areas today. But if you start adding on temperature to this wind-driven fire hazard, you can see with 1 degree C, 2 degrees, and 3 degrees C, you have communities that may not have been at risk in the past, and so maybe aren't putting wildfire risk that high in their list of priorities, but that come into new wildfire risk in the future. And what I want to highlight here is that this is a way that we can essentially screen for what's the limiting reagent to wildfire risk in an area, right? Because if you look, if I go back to the current hazard, you'll notice like nothing is stopping me on the fuels layer, right? So I don't have a fuel limitation. Temperature adds a lot, so temperature is probably a limiting factor. And you'll notice exposure is not a limiting reagent, right? There's plenty of other stuff that could be at risk if the weather conditions were unfavorable or favorable for wildfire. On the other hand, if you look over here up near the Sierras, whoops, you can see like in the present day, there's a lot of stuff that's at high risk. 1 degree C adds a little bit, adds a few new neighborhoods. But as you increase the hazard, you're now going into areas where you're not fuel limited, you're not temperature limited, but now your limiting reagent is exposure, because you're getting into areas where, yes, burning down a bunch more forests in the Sierras is probably not great, but there aren't that many people there. So you can use this combined view of what is the thing that is preventing catastrophic wildfire today? Is it fuels? Is it temperature? Is it wind? Or is it there's no one around to experience it? And you can identify places where if the only thing that's holding you back is temperature, you need to start having an idea of how you're going to prepare for wildfire in that area in the future. Okay, so other ways that basic science can inform and apply to science is providing that longer term history and ecological context. So like I said, the private sector thinks in short term timescales, which as a paleoclimate person, very much offended my sensibilities when I started. I would have my teams come to me because they were so excited because they got 10 whole years of claims history. And I'm like, okay, well, 10 years, that's good. It's a starting point. But like the Earth system does not operate on the time scale of 10 years. It operates on the time scale of decades to centuries, to thousands of years. So to give an example, like I said, I'm a paleo person, so I'm going to subject you guys to this. This is a tree that was recovered from near the 2021 fires in Canada. And obviously there's survivorship bias in here, but I think it's a really good illustration of how we can use history and paleoclimate and ecology to give context to hazards that we're experiencing today. So each of these little black marks on this tree here is a burn scar, and you can see each one of them is marked with a date. And it's clear that wildfire behaved differently in the past than it does today, because it looks like there were fires roughly every 25 or 30 years for centuries, up until the turn of the century when fire management practices changed and the goal was to put out every single fire. So obviously something is different here, right? Frequency of fire is much lower. But what may be less obvious, again, the single tree is survivorship bias, but the dendro people tell me that this appears to be broadly applicable, is not only was fire much more frequent in the past, this tree survived every one of these fires. So it was more frequent, but the intensity was likely lower, because otherwise, how would this tree survive being burned over and over again? So that tells us something about the ecology of forests. So this is a photo from the Bootleg Fire in Oregon. with a study that in California found that prior instances of low intensity fire, like prescribed burns or wildfires that were allowed to burn because they weren't threatening anything, reduce the risk of a high intensity fire, like a crown fire, the ones that cause destructive potential, by nearly 2/3. But there's sort of a last mile problem here because there's so much interesting research that exists in the forestry world. But that last step needs to be able to say, okay, if I've done a prescribed burn, what is the likelihood that that community that is near that prescribed burn survives? We have tantalizing anecdotes that this is helpful. We have fire chiefs who tell us over and over again, like, we would have never stopped this fire if we hadn't hit the burn scar of this old fire, or we hadn't hit the place where we had done fuels management. And that was a place where we were able to make our stand because wildfire is an actively defended peril, meaning you send firefighters in and they try and stop it to try and protect people. So being able to reduce the intensity of fire is really powerful, but that means you need to understand circumstances where fire is at high intensity. Okay, and so another area that I think is really important is this, I mentioned this at the top with parametric policies, but I just cannot emphasize enough the value of independent, trusted data sources. So I was doing a little real estate shopping in Naples and cruising my Zillow listings, and I saw this really cool looking house for $52 million, a very reasonable $190,000 a month mortgage. But I noticed in the listing that it mentioned that it has this ideal beachfront location. And sure enough, you can see it, right? Like here's the ocean in the background, a picture behind the pool. Here it is on Google Maps, and you can see, okay, yeah, it's right by the coast, right? So like any good catastrophe modeler, I did what you should do, which is I went and looked up its FEMA flood zones. So for those of you who don't spend all day every day looking at things like FEMA flood zones, what you're seeing here are two different relatively high risk zones. With the house is this one right here in the center, right? There's the pool that we just saw in the picture. Zone A is the 1 in 100-year flood zone, meaning there's a 1% chance of damage in any given year. It's a pretty high risk area. But V is where you're also at that high frequency, but the V stands for velocity. So that means in a place like coastal Florida, that's essentially where you're exposed to storm surge. So it turns out that this is how I learned that what $52 million buys you is apparently the ability to take a bite out of an incoming storm surge like your Cookie Monster so that it doesn't affect your newly built pool house. So I've told this story for a couple of years because, well, one, it's kind of funny, and it's a great example of how, one of the things that FEMA allows you to do, which is on the face of it is pretty reasonable, is allows you to hire an engineer to contest your FEMA flood zone. But of course, sort of a limited subset who has the means and motivation to contest a flood zone with a hired engineer. So yeah, so I would tell this story for a couple of years, but it turns out that, this is Naples and it's a high risk area. So we were actually able to put this to the test. So this is aerial imagery from the aftermath of Hurricane Ian, which put a substantial storm surge in this area. And the box is around our same house again. So I have a buddy who does a lot of post-event recon, and he says that the best way to be able to tell how far a storm surge has reached inland from aerial imagery is to look at the pool. Because if the pool is brown, storm surge got into the pool, but if the pool is blue, then all you got was rain. And I have to say, big ups to the original FEMA flood mappers who went and said, okay, this is where the line for V is, and this is where you're going to get storm surge versus this area is not going to get storm surge. Like, they absolutely nailed this. I will also highlight that this aerial imagery comes from NOAA, which runs this as a post-disaster service. So I suppose the lesson that we can take from this is that Mother Nature bats last. So having data that we can rely on, that is independent, is developed with consistent methodology, is hugely valuable in many parts of the private sector. Okay. And then my last example here is, I've talked a lot about applied science today. I am now an applied scientist, but I don't want to underestimate the value of just figuring out basic fundamental science. Um, data sets are great. I love new data. Who doesn't love data? But answering scientific questions means that someone like me, who can follow what's happening in the science and also understands how it applies to hard research problems, can take that new science and find new meaning in other areas. So this is an example of one that we're kind of grappling with right now, which is this idea that, I mean, rainfall impacts on wildfire are not straightforward. So I think this is relatively obvious, but it means that if you're trying to predict how wildfire will change in the future, like an annual average is probably not going to be that helpful. You need to include which ecosystems you're in. If you have a very rainy, uh, if you have a very rainy season for a few months and then things dry out, in some places that can actually be worse than if you just had a long extended drought because you produce new fuels that then die back, right? So the timing of rainfall relative to your wildfire season can be really important. And then I sit in California, I live in Oakland, and one of the major areas that we see of increasing risk is that after you've had a wildfire season, it's very common because wildfire season in California is in the fall, and then most of our rain comes in the winter. It's very common to have very dry conditions up through wildfire season, followed by very rainy conditions. And of course, if you've just had a massive wildfire, not only have you removed the vegetation, you've actually burned the top layer of soil. This is what this video is showing here in the background, where you can see the light colored soil. It sits in the burn scar of this particular fire that they're showing, is actually hydrophobic, like it doesn't allow water to absorb. And so it creates this compound hazard risk, right? It's this idea that you burn with the wildfire, and then when it rains on that burn scar, you get landslides and mudslides that can compound the damage, as well as increasing your flood risk. So that's not so much, it is an applied science problem, but understanding the relationship between the timing and spatial location and how it ties in with ecosystems for wildfires is a big, complicated problem. We have pieces of it kind of figured out, but trying to project that forward into the future is a really hard problem. So understanding that basic science has lots of interesting places where it can be applied in many different parts of the private sector, as well as back into public science. Okay, so I'm going to wrap up here, and then I'd be happy to take some questions. My big takeaways that I want you guys to come away with this is that public science is an economic enabler, right? It's sort of the fundamental infrastructure that allows many other things to be built on top of it within the private sector. The public and private sector parts of the scientific community are an integrated ecosystem. So many of the characteristics of what the public research enterprise can produce are not reproducible due to the structure of how it's built in the private sector. Impacts to public research are not necessarily immediate, although some of them are. They can play out immediately at the timescale of days, but they could also go from years to decades as we impact data that we rely on to build other parts of the economy, as well as the talent pipeline that we all rely on. But I do want to highlight that thinking creatively about how the science problems that have downstream human impacts may give you ideas for new avenues to explore new and interesting scientific problems. And with that, I would be more than happy to take any questions. Oh, I see we have a few in the chat. Oh, no, that's housekeeping. Wonderful.
Okay.
We do have one question.
So we'll go ahead. Thanks so much, Kelly. It was a very interesting talk. We appreciate you joining us today. Yeah, and at this point, we'll take any questions that you might have. I think Sam added some instructions if you want to verbally ask a question. So feel free to do that. If you're remote, if you're here, feel free to raise your hand. But let's go ahead and take the first one that's in the chat. So that's from Haiyan Tang. Thank you for the thoughtful presentation. I'm curious how you approach using CMIP projections in risk assessment, given known limitation in regional climate simulations and the inherent limits of Earth system predictability. In your experience, do you find these projections most decision relevant for risk applications? And where do you see the greatest need for improvement to enhance their usability?
Yeah, so this is a really good question, and I get this question a lot because I get a pitch. I'm going to say roughly once a week from a company and many companies that tell me that they can downscale CMIP 6 down to the building level, and it's going to tell me how many dollars down to the cent that I will lose from flood risk in 2047. I'm exaggerating a little, but not as much as you would hope. So to me, so I work with a lot of hazards that are not particularly well simulated in global climate models, right? Hurricanes and wildfires and floods are largely operating at a spatial scale that the climate models were not designed for. And obviously, like downscaling can get us a lot of the way there. But I think where the most exciting research opportunities that I see are not where you're trying to take a GCM and simulate a hurricane and then moving that forward in time and then off you go, but rather where you hybridize tools that are purpose built for specific end applications and then pull from your climate models what you feel that those climate models do well. So to give an example, there's some really exciting research that I've seen in this area using catastrophe models, which are, again, cat models are primarily statistical in nature. They're designed to say, okay, if I have a sea surface temperature field, I know that historically sea surface temperatures of this amount in this area have produced hurricanes at this frequency, right? So you're statistically sampling, but in a physically realistic way. So wouldn't it be cool if you could take sea surface temperature fields out of a climate model, which they actually do produce in a reasonably decent way and with reasonable spatial distributions, and use that to sort of tie it on to a catastrophe model that can then simulate hurricanes for you in a realistic way using a modeling ecosystem that's existed for 30 years. So looking for creative ways to hybridize using what a climate model does well, rather than trying to get it to, produce my wildfire risk for my house, gives you things that you can do that are useful. So I will also add that this is where having earth scientists broadly and climate scientists specifically sitting in the private sector so that they can understand the relative strengths and weaknesses of what each of the tools in your modeling ecosystem can do can be really valuable. So the most common thing that we get asked from like a regulator is to do like a scenario analysis. Tell me what your hurricane risk is going to be in 2050. But obviously, hurricane is one of the things that we have least well nailed down in 2050. And they'll ask me, well, based on this emission scenario and yada yada. My emission scenario is my smallest source of uncertainty at that time scale. So instead, we basically look at we only use scenarios in places where we feel like the direction and the magnitude of impact from climate change is relatively well constrained at the time frames where we're operating, which is usually at the latest end is 2050. So like sea level rise is great for scenarios, but not so good for most of the other hazards that I've talked about. Kind of in the middle, there's like a where you think the direction of impact, right? Wildfire is a good example of this, where you know that the risk is increasing, that temperature will tend to continue to increase risk, right? Because that's what's driving your impacts through vapor pressure deficit. But we don't necessarily know what the total amount is. That's where we can use sensitivity testing, like what I showed with the map of California. I don't need to necessarily know in 2037, this is when I pass into my high risk wildfire zone. But knowing the direction of change and the areas of my book of business that are sensitive to those relatively small changes is a way to productively make decisions using what we know that a climate model does well using temperature fields. And then finally, in places where we don't have a good sense of either the direction or the magnitude, hurricane, unfortunately, is a very good example of this. I have a lot of gray hairs because of that. That's where we can actually use an alternative approach where instead of directly trying to model hurricanes, we do things like what we call reverse stress testing. And this can be really useful for things like critical infrastructure. In the case of insurance, we use it for things like capital allocation. It says if a hurricane is more than this intensity, that's the point where my power lines fail. So I don't actually really care how many hurricanes there are in the Atlantic Basin. What I actually care about is how often you get hurricanes that are above, whatever category 2 in this area of the coastline. Then you can sort of cycle through like how much change in overall basin frequency would I have to see to produce a result that would cause me to freak out for my piece of infrastructure or for me to not be able to meet my capital obligations. And now you have something you can actually track, even though it's something that would be very difficult to simulate directly. So I think that's where like having a good knowledge of what the models do well as how it can be used in decision on the decision side is really important as opposed to just trying to produce everything directly because you have a hammer and we're looking for a nail. So I realize it's a long-winded answer to a tough question, but it's one that I've been grappling with for a long time and continuing to grapple with. And sometimes it works and sometimes it doesn't.
Great, thank you. We'll take one in the room here, so go ahead.
Sure. Thanks for a really cool presentation. Oh gosh, I guess one question I have is, I was interested by your like density plots as far as the density kind of increasing the fire risk for spreading or
Mhm.
whatnot. But I'm curious if
Yep.
like density or something like that is also considered from an environmental uh, aspect, I guess, right? I can see the density actually slowing wind speed down essentially, right? In some areas, maybe from like an urban climate or an urban kind of turbulence model being at a higher
Are
risk.
you producing enough surface roughness to be able to basically
Yeah,
buzz this up?
exactly. So I'm just curious if the insurance industry is at that level of modeling yet to incorporate those kinds of risk to kind of adjust rates.
Yeah. So the answer so far is no. Um, Most of where our wind-driven wildfire exposure sits is at sort of the denser suburbs where you're not getting tall enough buildings that you're getting significant surface roughness that would disrupt, a 80-mile-an-hour Santa Ana wind that's driven by topography. So, at that spatial scale, that's where the majority of our exposure sits. And so it's not like downtowns where you have skyscrapers where you're adding a lot more roughness. Now, we do use those sorts of surface roughness that are associated with land use for things like hurricane, um, which in some cases, yes, it can reduce your wind speeds, but in other cases, you can get increases in wind speed. You get sort of an urban, call it like the urban tunnel effect. We've seen this with some of the typhoons in Japan, for example. But wildfire is a comparatively new model for us to be building. I mean, they really have only started developing in earnest in the last like 10 years or so, as opposed to hurricane modeling, which has been around for more than 30. So I think there's a lot of real, and I think wind is an area, which is a huge opportunity for understanding intersection between wildfire hazard and sort of economic impacts, because there's been a ton of focus on temperature. Temperature is something that we have readily available, something that comes nicely out of a climate model. But wind, especially in these really complex topographies where it actually is the major driver, is really hard to get out of the model. And so being able to get at the right spatial scale, oh, my house is at the mouth of a canyon, and that canyon always produces extra winds during a Catabatic wind event like that. That is, I think, a huge opportunity for the atmospheric sciences to show up and creatively think about how they can combine their knowledge of fine scale wind processes with economic impacts that are going to come from disasters. But yeah, it's a really good question.
All right, well, I think we're at the top of the hour. So we really appreciate your time, Kelly, and thanks so much for presenting, and thanks to the audience for the great questions. So,
Yeah, thanks again for having me. And yeah, otherwise, if I didn't get to questions, give me a shout. Thanks.
all right, sounds good. Thank you.
Thank you, folks.